Welcome back to The Explainer. Today, we're stepping right into the official GoldMining Europa strategic environment. We're looking at week 28 of our EURUSD strategic series, and we are analyzing a live, real cent account. No hypothetical backtests, no perfect simulated environments, just real capital, real market conditions, and real algorithmic execution in one of the most liquid financial markets on Earth. We're going to completely strip away the noise to see exactly how this institutional-grade strategy actually performed over the past week. Okay, let's kick things off with our foundational number, 10,000. Before we get into the micro movements of this week, we really need to zoom out and remember the macro objective, right? 10,000 cents is our long-term milestone. It's a massive campaign that started from a baseline of just 2,500 cents, so roughly 25 US dollars. Now, you might be wondering, why trade in cents? Well, it's actually a super deliberate strategic choice. It lets the algorithmic system use precise fractional lot sizing and run these really complex grid strategies with maximum flexibility. Doing that on a standard account would literally require a much larger capital base. So we're navigating from 2,500 to 10,000 cents step by calculated step. And honestly, that brings us to the core philosophy of this entire account. It is a marathon, not a sprint. Look, in retail trading, there's this massive temptation to just chase those volatile, huge weekly gains. But true algorithmic success, the kind that actually survives changing market regimes, prioritizes consistency and rigorous capital preservation over absolutely everything else. This week, it wasn't about hitting a home run. It was about methodical, highly defensive progression. The algorithm is just patiently extracting value from the market's natural ebb and flow, protecting the principal balance so it stays fully operational for the long haul. This right here brilliantly illustrates that disciplined advance. Looking straight at the core performance metrics from the MetaTrader 5 reporting system, you can see the algorithm secured exactly $11.99 in total profit. That translates to a steady, controlled gain of 0.454% for week 28. And look at that gross profit of 19.88. It absolutely towers over the minimal 7.89 gross loss. That gives us a really healthy 2.52 profit factor and a solid recovery factor of 2.61. You know, these aren't those flashy double-digit weekly returns that look amazing on social media but blow up your account a month later. No, this is exactly what a sustainable, mathematically sound edge looks like as it plays out over time. To truly appreciate that $11.99 gain, we kind of have to contrast the algorithm's precise execution with the totally unpredictable nature of the broader financial markets this week. I mean, week 28 was heavily driven by shifting Federal Reserve rate expectations, some pretty nuanced policy signals out of the European Central Bank, fluctuating Treasury yields, and broad swings in US dollar sentiment. For a discretionary retail trader, that kind of macroeconomic volatility is incredibly stressful, right? It often leads to emotional, erratic trading. But the algorithm? It doesn't read the news. It reads price action and statistical probabilities. It just stayed entirely indifferent to the macro noise, executing its logic to extract that profit without fundamentally disrupting its longer-term strategic positioning. Let's actually map exactly how the system navigated that chaos on the M15 timeframe. Just take a look at the cinematic flow of the price action here. You can see the sharp intraday swings caused by those macro data releases we just talked about, but instead of getting chopped up in the volatility, the algorithm simply absorbed the initial shockwaves. It scaled into positions precisely at the extremes, you can see that marked by the entry and exit points, and then efficiently closed them out for a net profit the second the market inevitably reverted to its mean. It is just a beautiful demonstration of mechanical discipline right in the face of market chaos. But hey, profit is only half the equation, right? The other half, and honestly the much more important half, is the risk taken to get there. Despite all that macroeconomic turbulence we just tracked, the weekly realized drawdown was kept to an incredibly low 0.174%. Really think about that for a second. To secure a near 0.5% gain for the week, the closed trade risk exposure was practically zero. The capital was literally never in serious jeopardy. The system's defensive parameters are working exactly as intended here, cutting losing sequences short and stopping localized volatility from causing any structural damage to the account balance. Now, our approach here demands radical transparency. In the financial space, you usually only see the highlight reel, but here we are tracking both the weekly and lifetime balance right alongside the floating equity. Notice the gap here. Our close balance sits at $2,653.50, but our floating equity is currently lower at $1,873.27. Why is that? Well, because grid-based algorithmic strategies inherently carry open floating positions that absorb market movements while waiting for algorithmic resolution. This separation between equity and balance is a completely normal, actually necessary part of our long-term strategic positioning. We aren't hiding this at all. We're highlighting it, because understanding how to manage floating drawdown is the true secret to this style of institutional trading. By embracing this kind of fully transparent reporting, we can accurately track our genuine lifetime account progression. Since its inception, this live cent account has achieved a solid total growth of 6.14%. We've generated $153.50 in pure realized profit from our 2,500 baseline, carrying an overall profit factor of 1.35. So yeah, it's a slow, methodical upward climb. Every single week, like week 28, with its modest but super secure 11.99 cents, acts as a foundational building block. We are essentially compounding our edge brick by brick, entirely insulated from the psychological pressures that usually destroy human traders. Ultimately, it really just comes down to this. Consistency and capital preservation remain far more important than chasing large weekly gains. Every single metric, every chart, and every execution we've analyzed today proves that this account lives by that exact rule. This journey from 2,500 to 10,000 cents, it is not going to happen overnight. There are going to be weeks of high volatility, periods of deep floating equity, and completely flat markets. But disciplined execution and strictly controlled risk management will always be the defining factors in reaching our ultimate milestone. We're playing the long game, and the math is entirely on our side. Which leaves us with one final, pretty exciting question. As the global economic landscape continues to shift, as central banks adjust rates, inflation data surprises the market, and geopolitical events unfold, how will future macroeconomic shocks test the resilience of our strategy? Week 28 was a calculated success for sure, but the market never sleeps, and the algorithm is always running. Thank you so much for joining me for this explainer, and I definitely invite you to keep following this incredibly transparent journey toward 10,000 cents. It's going to be absolutely fascinating to see how the system handles whatever the market decides to throw at it next week. Catch you in the next update.